All right, Bitcoin Friday, May 2nd. Let's take a look on the macro first. Just some interesting perspective. And when you zoom way out on the quarterly chart, right, each candle is 3 months. Maybe we could take something away from this. So just some observations that I'm looking at, potential interest for the future. Let's take a look. So the 3-month chart, going all the way back to last cycle, right, here's a big kind of a warning here, right? This major sell. We had a high of 69K and it closed at 46. And then it followed through with even further downside. We went to a low of less than 33,000. Ended up closing back up, but that is not really a bullish recovery. It remained red and close to a hanging man. You'd like a little bit higher on the body, but a close to a hanging man after a major sell-off, right? Obviously, hindsight's always 20/20, but look, what's more interesting to me is that pierced through this red line versus not back here, right? Look at the bounce. And you might look ahead and see what I'm going to point out here. So this red line is a 2-year moving average. 8-month, right? The EMA 8 times 3, right? Let's maths. Okay. Obviously, too late to get out there. We only went another 15-20% lower. But look at the massive move down. A quick trap by the bears after maybe a subtle hint here. But, hindsight's always 20/20. We didn't know it then, really, right? You never know if it's going to hit here and bounce and go higher, right? Like we're doing now. The point is, when you're trying to gain traction, it's seemingly the EMA 8, that 2-year moving average, could be the pivotal moment, right? Bear, bear, bear. Look when we got above it. That's instantly when we flip bullish. We closed above the 2-year moving average. Closed above it, right? Started gaining traction, held it. Even with wicks. Look at the wick, bounce. These are perfect taps off of this 2-year moving average on quarterly candles. That's eye-opening to me. So why are we looking at this? Well, for all the people that are bearish, where's the bearish looking candles here? These are like doji candle. That was a 3-month doji candle, small body, wicks on either side. Are we not bullish this candle? So far, at least. Now we have to wait till July. We have, almost 2 months to wait. But, look at the facts here, right? We don't have anything sketchy looking. We haven't had anything crazy like this. We could get this month, right? In 2 months, anything could happen. We could see something like this, right? We could make a 120K high. And then by July, we come down and close in the 80s or 70s. Okay, that would be a warning. But just from a candles perspective and, the past 5 years of data that we have in front of us, if we're going into a bear market, it seems like we have to pierce at minimum below the 8 EMA on this quarterly chart. And so as of right now, that number is 71.5. Now, if we wait till July 1st and this candle still looks okay, and we're assuming that, we're around this price or even higher, this EMA 8 moving average is going to be in the upper 70s, probably 76, 77K once it updates to July, which is way over here. I would guess maybe even knocking on the door of 80K, depending on where price is. If we're much higher, that's going to be 80K. And keeping in mind, for at least the past 5 years, when we start to pierce that or close below it, then we're in trouble. Obviously going to probably be lagging again, right? If you're waiting for a close below here, it could be, very, not much more downside. But even a flirt with that below that level could be maybe a warning, right? If we get that, like if we go to 120 or 150 for Bitcoin, and then come October, November, we pierce through that at 80, 90K, whatever it is, well, let's at least give it the benefit of the doubt to maybe that's a signal or at least a warning that the trend might be exhausting. Just pointing out the facts here that everyone that's bearish, there's certainly no evidence here yet. All the zones that we looked at on the weekly, like that's these color boxes if you're wondering, If you haven't watched any of the other videos this week, like that's all the chaos and highs and lows zones is just right there. And like the encompassing previous 2 candles. Not even really. It's like 1 1/4 candle, right? We're not even way much through this month yet. So July 1st, this updates, and then we can see, right? Waiting for candle closes is what we really have to do. But from a macro perspective, what's not to like here? There's no fear here. If you showed this to someone that knows about charts and doesn't know about Bitcoin, I don't know if you can find that person, but they would not be saying you should sell here, right? Just from a factual point of view. If you see candles like this, okay, now you have maybe some weight to it, but as of now, no warnings, just on the massive outlook, right? Okay, now let's zoom into the monthly. Looking at it from this perspective, we still have nothing to worry about, right? Look at the EMA 8. We've said since February, really, like if you come down and we're going into a bear market, you've got to at least go under the EMA 8 first, right? You can't be bearish until you at least go under the EMA 8. And look at these perfect bounces. I mean, you couldn't even script it better in Hollywood. Everything looking great. So at least close under the monthly EMA 8, and then maybe we zoom out to the 3-month and check and see what that's looking like. But look how great these are. These are all accelerating trends. Like, I mean, look at the moving averages breaking higher even. We're even putting more daylight in between all these moving average. Seemingly higher is the odds you'd have to lean here based on the facts. Now, could we, again, like, could we come up to 105 and put in a lower high wick and actually close lower? Yeah, that'd be a warning. But we haven't got that yet. So we have 30 days for this. We have almost 60 days for the 3-month. So just putting the macro in the back of your mind, saying that, okay, we really have no evidence on the bigger charts. And those of you that are only paying attention to social media that are putting up indicators, like those lag behind price. The price is now here. Those indicators are showing bearishness because of these moves here and the 74K low. We actually closed higher, right? Line chart. No warnings here. Everything's bullish. Per the candles, per the price. Factually, you should be watching that, right? Price is king. Indicators lag. All indicators are lagging. There's nothing that you can like read into indicators like, oh, indicator says we're in trouble. Better get out. Like if that was true, don't you think everyone would be making money if there was one secret indicator that like ruled them all, right? There's no one indicator. There's no perfect indicator. Get that out of your head. Candlesticks, support and resistance is the best way. Anyone that studied charts for over 5 years is definitely going to tell you that. All right, weekly. All right, we're zoomed in. Here's our zones. Remember, red zone, crossing the stream's bad, right? That would get us under that 3-month EMA 8, the 2-year moving average. And I still have high conviction if we go back down here and start to close in this box, a close under that, if we put in another lower low, we're cooked. Bears got us, and it's probably bear market. But I don't think that that's logical, even at this point. At least not yet, right? We have no evidence. And we're actually on the verge in 2 days, 11 hours, if we could close above this guy, really crafting a perfect bear coffin. We're starting to annihilate the bears if we start to close above that. 96.258 on this exchange, 96.3 is kind of my line. If we can close above 96.3 this week, the bears are losing major control here, right? We should not be taking out that high if we're going into a bear market. We should reject here. Now, if we do reject, it doesn't mean we're definitely going to a bear. What we'd want to do is hold above this zone, ideally. The 21 EMA is at 88. Hold above 88. If we're above 88, you should not be worrying. If we're below 88, right, that's why this zone is yellow. It's caution. Watch out. Doesn't mean we have to, but you know, we see what's right below us, right? We're aware of the danger lurking, right? We're swimming in perfectly crystal clear water now, but If we come down here, the water could become a little murky, and if you're in the Caribbean, you don't want murky waters. So watch out for down here. Otherwise, we're troubles aside, we're watching unicorns, butterflies, and rainbows up here, where everything's good. Watch the facts. We're doing daily updates now, so just like nothing's going to catch us off guard, right? We're doing daily updates for that reason, to keep you on your toes and know what's happening at all times. At least from the macro perspective, like everything still looks a-okay. Do we have any kind of warnings anywhere? Well, so far, not the 3 month, not the monthly, not the weekly. Although we're at resistance, right? Until we get above this zone, I'm still a little cautious and hesitant, especially since we've basically nuked 30% higher immediately, right? Teleported right to major resistance. I would almost prefer to come back down a little bit and at least to up the EMA8 to kind of refuel and not get too antsy here. But you don't always have to have that, right? Hello, right? We could if we break highs again, like I wouldn't be surprised. I don't know if we can do that immediately, but I mean, this was pretty close. I mean, we did 30% there. We barely came down at all. And we came down a little bit and went up another 12%, came back down again. Like, look at the volatility here. Like, we closed here, down 6%. The very next week, up 13%. The very next week, minus 8%. And then in the same week, good God, what a volatility mix of a couple weeks there. We could get a rhyme with that, right? If we kind of pause here, go back to like the EMA8, 6% move down, maintain us in these low wicks here, remain healthy, right? Kind of refuel the jets, and then we break through. That's kind of what I would prefer if we want to, really rip the bear's face off, which I do. I'd like to shotgun them and, blast a 120 by, mid-June or something. If we're going to do that, we got to refuel first. Like, whether it's here or we get up here, like, I'm okay if we, like, kind of reach up into the 100s and then kind of refuel around here and do one of these numbers, right? We can do that. That would be bullish. But I really wouldn't mind if we kind of flip the script here and do one of these guys, this would be my kind of preferred scenario, and I think the strongest for the bulls. If we kind of chill here, refuel a little bit, and then massive move, like for a couple weeks, yeah. It doesn't sound like 10% a massive move, but just to like really break through this door quickly is what I want. I don't want any like hesitation. And just like this guy, right? It doesn't hesitate like at this support level, right? This was pretty big support. I mean, look at all those wicks right there. And just major nuke down. After like hesitation, we're like kind of waiting. What's going to happen? Bam! Bears kick the door open, right? I'd like the same thing. And I think the best opportunity for that is if we kind of chill here, reload, and then bam. Kabam. Shabam. Kazam. Whatever. Okay, that's the weekly. Not like a prediction, just my preferred path. 3 day. It's looking real good here. Look at the EMA8 cross up. It's been a while. Let's go look at the last time we started. Look at the 100 curling up too. All really good signs here, right? Look back here. EMA8 starts to separate and move back down to the EMA8, right? This is kind of why I wouldn't mind moving back down, kind of reloading, keeping healthy. Big move up again, come back down, hold the EMA8, get some gaps in between these moving averages. Look at the 100 start to curl up. Shotgun, right? Look at that. Right as the 100 starts to curl up. Right as the EMA8 starts to move up. I mean, it's right there. I would be more leaning towards something like this if we were up here. If we start to get above 100, watch out. The bears are cooked. Until we can close above here, like I'm a little skeptical that we have enough energy left just because we've done this so quickly. Inside of 3 weeks, we're up 30%. right into major resistance, right? That this is where you would technically be shorting or taking profits. Certainly if you bought down in here, it's just such a major level. But I wouldn't be surprised if the bulls just are not done yet, right? Just don't fade it. I'm just slightly skeptical still here, right? As probably a lot of people are. But you know, if we zoom into the daily, like the evidence keeps stacking towards the bulls' favor. Right? We've looked at this, like move up, consolidation, move up, consolidation. I mean, here's if you want to kind of follow, like this is it. Something like this will be a-okay. But it's like it's starting to get a little unsustainable if we're going to keep doing this, right? You've got to fuel a little bit deeper here, right? This is like you know, you're rolling your Ferrari and you just fill up with a gallon or two at a time and then go roll on the highway again. Like you need to refuel a little bit more, bud. You're gonna get cooked here. You can't just keep going pedal to the metal and not reload a little bit more. So at this major zone, I mean, look at this on the daily, and as we zoom in, it becomes more apparent how significant these levels are. Looking even at the closing prices, look how much time we spent in here. Well, at least we're back in here, right? At least we didn't reject here. We could have easily rejected here. And if the bears really wanted to show their strength, they should have got us there, and they didn't. This is the first major warning that the bigger bulls could be here. The fact that we bounced here when the bears, if they were here, they should have pulled us down here. And really we really should be flirting with 90 right now if the bears are really here. Based on this chart, the bears are losing some strength here, big time. The longer we stay in here, the weaker the bears are getting. If we flip up here, again, where those coffins are looking mighty shiny, whatever that means, 4 hour, 4 hours looking a little bit more, at least sketchy on as far as, you know, proper structure. Like we're breaking the 21 here. We hit the 34 this time. We got a little sketchy way down here, little dip, but again, like when it looks like the bears might start getting us, the bulls fight right back. So on a move down in the short time frame, we're watching these highs, right? Look at that blue line. I mean, it's a pretty definitive breakout there. So if we come back down, really, I don't want to lose the 21. The low part of this zone is 95, a little bit higher. 95.7 because we're so zoomed in. But watch that 21. But maybe not because it kind of invalidated here. Maybe the 4 hour, it's the 34. We got a low wick there, low closes. 34 might be the moving average on the 4 hour chart. Maybe at least for this move, we have to watch that one. All right. How's the Bollinger Bands looking? Pretty wide open. Don't signal any kind of power moves like we had, you know, back this time yesterday. We were looking pretty good. A little bit of consolidation. Bollinger Band kind of remaining flat on the bottom. Watch for that to open, especially if we get up in here again. We'll see how those look. Gaussian channel. Bounce with a wick off of that. I mean, it's bulls all the way here. The bears have no weight on pretty much any time frame at this point. The only thing the bears have to cling to for hope is like this bullish zone here. It's the green zone for a reason. If we get above it, it's blast off. But like major support back here, broken, flip to resistance, flip to resistance. We're trying to break down the door, but the door is still there. Make no mistake. So the bears have it, but could be just a baby bear on the other side. We don't know. So watch for this, and we'll see if the bulls can sharpen their horns and throw them in the coffin. Just wanted it there. Questions, let me know. What else? Everything's pretty flat today, but that's okay. Right? And you might be wondering, like, why the hell aren't altcoins going if Bitcoin's kind of chilling? Exhibit A, B, C, and D. Emphasis on the D. Dominance, hello, at 65 almost. Consistent highs weekly. As long as that's trending up, altcoins can't go. They're in prison, right? That's how you can look at it. Dominance is high, right? You could just think of how many guards are on duty, right? We got to eliminate some guards, get down into the 50s. If Bitcoin dominance was 54 right now, you would see alts up 10, 20%. It's just all the money's still in Bitcoin, and it's not leaving yet. And I think the money will start to roll into altcoins much more bigly, very bigly, once we see over 100K again. That would give a lot of confidence back to the market. And then everyone would be like, okay, Bitcoin's already done, it's back at 100K. Am I going to risk all my money and making 50%? Or maybe there's a few 5, 10 Xers, 20 Xers out there that maybe we should try that. Right? That's kind of Bitcoin lifts you back to safety and outer space. And then altcoins kind of come out because Bitcoin gets boring. Bitcoin goes sideways. People are looking for more returns. Trickle down effect first, probably going to be the higher market cap. Solana, I would expect to move. Chainlink, Ethereum, maybe. Ethereum, if it's lined up the right way to go. And then you'd see the trickle down effect on all these guys. Okay. Could be interesting next couple of days, couple of weeks, but more interesting to see if we do break these floodgates and we see 100K again. If we could actually get an alt season and we could still get an average 5, 10x out of a lot of these alts. End.